So you're struggling with trading. It's been days, months, for some it's years, but you're still not seeing some positive results. It's frustrating, isn't it? You always think that you figured it out, and in next few days the market humbles you again. Want to know what actual trading is? Want to know what's the secret behind the chart analysis and where you're actually going wrong? Well, I personally used to analyze charts before to be right. But then when I realized this point about analysis and trading, I started analyzing charts to make money. It was from analyzing the charts to being right, to analyzing the charts to make money. And this is the whole difference that will change your trading forever. I understand why we want to be right. We want things to be in our control. That is why we want to analyze more and more of the charts. I've been there. I remember that I thought if I am losing money, that's because I'm analyzing something wrong. I need to learn more, I need to analyze more. So, initially, when I started trading, of course, it was just pure luck. Then, analysis came into picture, candlestick analysis. Then, I started making money for some time, beginner's luck. And then, of course, like everybody else, beginner's luck ran out and I started losing money. So, when I lost money, I thought that okay, I just need to learn more, to analyze more, because if I could make money without analysis, then I could definitely make money with proper analysis. So I went into this rabbit hole of just analyzing, and over analyzing. That I would analyze something, I would apply it, it would work for a few days, then again it would be a loss, then I would be like, okay, I need to learn more, then I would learn something more, then I would apply it, again loss, then I would learn more, loss, more, and loss. It was a never ending cycle. Until one day when I sat and I realized that I was over trading. I was just humping around strategies. But all in all, this everything resulted to one thing, resulted because of one thing. That was because I wanted to be right. I mean, it's our innate nature as a human being that you want to be right. I've been brought up and conditioned in a way that if you're losing money, if you're losing in anything for that sake, you must be doing something wrong. So I wanted to be right in trading on every trade. I wanted to have 100% accuracy. Though there were some people who would say that no, you can't have 100% accuracy, I didn't listen to them. I don't. Because that's again a bias of the mind. Once you're convinced that something can happen, that maybe this indicator or this setup or this strategy will solve all your problems, you will ignore all the other commentaries that are opposing your beliefs. That's called confirmation bias. So I had confirmation bias and I wouldn't listen to them. I would just keep on learning more analysis method, more techniques, more indicators, and just to be right. Because I wanted to prove that okay, I can have a grip on the markets. But the point is, nobody can have grip on the markets. Markets are for for biggest thing, randomness. Because it's you, me, everyone else is participating in the markets. It's not made by some human or robot. I mean, sure, now AIs are participating, but you, me, and everyone together makes this market. So, unless and until I can control your mind or the other people's mind, I can't be right always. That's just a fact. It took me, I think, around 3 years, 4 years to understand this point that, yeah, I can't be right always. Because if I feel that I have a need to be right, that means the only way, just understand basics, how the market works. If the market has to go up or if the market has to come down, there's no magical indicator, there is no magical setup. that is going to do this. It's only a game of supply and demand at its core. Let's just first understand this clearly. If you see your indicators indicating, okay, it crossed above this moving average, that just means that there's demand, and that demand was so high that, okay, it was more than the previous supply. Or if you're following SMT or ICT concepts, institutional trading concepts, still it is all at the core demand and supply. Previous breakout, range breakout, block breakout, or you see Cooch, that's all just demand and supply. If a market manipulator, even an operator, has to manipulate the market, let's say, there's only one way that he or she can do is by increasing the demand or the supply. There is no other fancy way to do that. It's not some algorithms or something. It's he will create the demand so that you buy, and then he will give supply so that the market comes crashing down. That's it. There's no other way that a person can manipulate the markets. So at the core, it's just demand and supply. Now, this is very difficult to understand because internet, books, social media have fed you these fancy lies that you can predict the markets. You can't. For example, let's say if I say I can predict the markets, that means if I buy something for that asset, stock or index or options, whatever I buy, for it to go up in value, you or other market participants have to buy after me. So, can I control your mind? I can't come and tell you that, okay, now you have to buy. Because if that is what I hope controlling means, that means why should I be the one to control you? Why can't you control me? I mean, you buy something and then you come to my mind and tell me to buy that again. It's just not possible. So same, I can't tell. I can't control. That's the whole point of it. It's just basic supply and demand. It cannot be controlled. So trading at the core is very misunderstood. Because of this fancy setups, indicators or whatnot jargon there's there in the market, people think that it can be predicted. It can't. It cannot be predicted. It's just demand and supply, and we never know when the demand is going to come or when the supply is going to come. For example, even if people say, okay, that's institution buying, let's buy there. What do you know, man? What do you know if the institution has lost interest in it? Or maybe they're just celebrating somewhere a vacation and they are not willing to buy it now. How can you be so sure that this level that you analyze will actually work? And there's a negative connotation to this. I'll discuss that in some time. So, the point first to remember or to be aware of is that this cannot be predicted. So then what's the point of analysis? Well, analysis is not for you to be right. Analysis is simply this. You can buy a stock at any given point of time. There's nobody stopping you. You can wake up tomorrow morning and let's just say randomly at 10:23 p.m., 10:23 a.m. You can just buy a stock. Who's stopping you? Nobody's stopping you. But analysis gives you just levels where supply is overpowered by demand or vice versa, demand is overpowered by supply. That is it. It gives you those value areas where maybe there's a potential reversal of the stock. Because those value areas are where you enter and it gives you a good risk to reward. Will it work? Will it not work? We don't know. That is why there is a risk. We don't know if those value areas will work or not. Hence, there is risk. But because you've been fed these lies by social media, by internet, by books, or whatnot, that you can predict the markets, and that, oh, this value area will work, that value area won't work, this support will work, that won't, this indicator will work like this setting you change and it will work magic. If you can actually do that, then where is the risk? If you're saying that yes, because of this so and so setup, so and so indicator or whatever, you can actually figure out that this will go up or down, then where is the risk? The risk is only when there is uncertainty. You find value areas because of your analysis, whatever analysis you do. You find value areas and then you place your trades with a little risk. So that if it works in your favor, it works. If it doesn't work, it doesn't work. There's no guarantee. And that is why it's uncertain, and that is why there is risk associated with it. If you can just predict the markets, if you can just know where the markets will go up or down, there's no risk. Even institutions have risk. People say, okay, this is the way institutions trade. Let me ask you this. Let's say there's an institution A who's trading. There's an institution B who's competing with A. Because institutions among them have competition. They want to be the top. So which institution is trading your method? What is ICT? Institution? Okay, which institution is trading? So if this institution is trading ICT or SMT or whatever you want to trade, what is the competition doing? You have to think. Not all institutions are ganging up on retailers. We are not even 4% participants in the entire markets. Institutions are fighting other institutions to be on the top one position. It's just like how Apple and Samsung have been fighting for customer to bring new products. They want to have the majority market share. So same way, institutions are fighting amongst each other. So there is not one institution method. That is the lie that has been sold to you. Get out from this delusion that you can predict the markets. You can't. Now let's get some technical into it. At any given stage, the market going up or down is 50%. It is 50%. There's 50% chances that the market will go up. There's 50% chances that the market will go down. At any given point, you analyze, you don't analyze, you just look at the charts randomly. You'll see suddenly sometimes there's a big rise out of nowhere or there's a big fall out of nowhere. It's just at any given point in the chart, at any given time, there's a 50-50 chance that the markets will go up or go down. Your analysis will give you those value areas, and you might think that analysis is giving you those value areas where there is higher probability of it going up rather than going down. No, that's also wrong. Even at value areas, there's only 50-50 chance of it continuing in the direction of what you anticipated or reversing. Let's say you find a stock going up and you figured out, okay, this is the value area. This was a support, or if you want to call it, and the price comes back to support. And you think, okay, because it went previously, there is 70% chance. Where are you getting the 70% chance from? It's just delulu, it's from air. You want to convince yourself, okay, you're in control. That is why you're drawing the figure 70%. There's no 70%. There's only 50-50 chances of it going up or going down. But when it comes to the value area, what you can do is you can take a risk and you can enter the markets saying, okay, let me see if it goes up. It goes up. If it goes down, I'll exit at my stop loss. This value area didn't work. Then go to the next value area. Then go to the next. Go to the next. That's all there is to trading. There's nothing fancy. Now you see, I don't want to be right. I want to make money. So I'm trading all the value areas that I analyzed because of my analysis, sure. And whichever works, I don't want to be right on this particular value area because this looks like a very good setup. No, it's just 50-50. And once it starts going up, it's 100% up. And once it starts going down, it's 100% down. There's no magic, there's no fancy indicators, there's no institution, there's no what do you call AI algorithms. It's all purely based on demand and supply. Whatever these fancy indicators, institutional trading, AI, or algorithms are working are all just working on demand and supply. That is it. And at every given point, there's only a 50-50 chance of it going up or down. And you just find those areas where you potentially think it could reverse. Because yes, markets are random. So because of that randomness, there will come zones in the markets where collectively majority will agree at certain price. That is what the high of the day and the low of the days, or high of the month, low of the month, high of the week, low of the week is formed about. There's not one person willing to buy more or one person willing to sell more lower. Because of randomness, there will be areas in the charts that will form value areas, but that's not necessarily means that that value areas will work. There's always a 50-50% chance for that value areas to work. So you just enter at the trade in those value areas with a risk, and you set your reward, okay, 1:2, 1:3, whatever. And that is how you do the game. You can't predict the markets. So what can we do now? Well, because you don't analyze to be right, you analyze to make money. All you can do and all you have in your control is your capital. You don't know whether this value area will work, that value area will work, or if this value area may not work today, but 10 days after the same value area may work. And sometimes this value area would work today, but after a month that value area would not matter. The market will just go through it like it never existed. The smaller the time frames that you go to, the more value areas that you will see. And the higher the time frames that you go to, the lesser value areas you will see. So now, all the game that you have to play is risk management. You have to allocate your money in such a way that you are able to sustain through all the value areas that you've analyzed. Because let's say you're trading a 1-minute chart, example, and you found out 10 value areas. You have to divide your capital in such a way that you're able to sustain 10 different value areas. And you have to be able to take all the trades without taking a big hit on any one of it. You have to be able to sustain on all the 10 trades. And if you're going a little higher, like maybe you're taking a 1 hour or a daily or a weekly time frame, maybe where you have only 2 value areas, then you have to divide your capital in such a way where you sustain both the trades and still not take a big hit on your account. So the only key for you to success is managing your money. There is no other way. You can't predict the markets. No matter how much you analyze, there's nothing magical about it. You can't analyze to be right. You only analyze to make money. Manage your risk. And I will talk about risk management in the coming videos, how I do it, how I manage my money and how I manage my risk. But for now, manage your risk, and remember, don't analyze to be right, analyze to make money.